The weird phenomenon in China's real estate market are numerous. Homeowners who bought unfinished properties are seeking justice, but now even homeowners who have just received their new properties are also seeking justice and demanding refunds. What's going on? The homeowners who are currently seeking refunds are those who invested in the Qingchengda city development in Shenzhen. Inspecting a newly completed property is usually a happy event, but when these homeowners entered the rooms, they were in for a shock. The ceilings and walls were leaking, the pipes were broken, some walls were peeling off, windows were damaged, and even the electrical boxes were leaking. This is not what you'd expect from a fully renovated property that costs over 50,000 yuan per square meter. It's clearly a shoddy project. When the Qingchengda city development opened for sale at the end of 2019, it was during the most heated period of the Shenzhen real estate market. All 365 units were sold out within 4 hours at an average price of 51,500 yuan per square meter. 3 years later, the property's price has dropped to 46,000 yuan per square meter, a decrease of 5.5 thousand yuan. A 100 square meter house has lost 550,000 yuan in value, not to mention the interest on the mortgage paid for 3 years. At that time, the mortgage rate was also relatively high, reaching 5.46%. To make matters worse, the developer couldn't issue invoices because they didn't have enough money to pay taxes. Without an invoice, the buyers couldn't get the property ownership certificate, and without the certificate, they couldn't trade the property. All of these issues are unacceptable to the homeowners, so they are demanding refunds. Established in 1997, privately owned property developer Qingchengda Group was once ranked the 6th top real estate development company in Shenzhen. However, in recent years, due to the Chinese government's real estate sector regulation, the company has had several problems with its funding. Now, it can't even issue invoices to buyers. What a shame it is. In fact, real estate companies in China have been struggling in the past 2 years. Debt defaults are frequent, unfinished properties are common, and as the Chinese real estate market enters a winter season, real estate companies are experiencing massive losses. Recently, Chinese real estate companies released their annual performance reports for 2022. According to statistics, the top 100 real estate companies had a sales volume of only about 7.29 trillion yuan in 2022, a decrease of 40% in scale. And the number of companies with over 100 billion yuan in sales has decreased by 23, leaving only 20 companies. Among the 88 mainland real estate companies specializing in residential property development, 40 experienced net losses after taxes last year, totaling over 170 billion yuan. The losses ranged from millions to hundreds of billions, with 6 companies losing more than 10 billion yuan, the highest being nearly 29.9 billion yuan. The 40 real estate companies experiencing losses were mostly private companies, but there were also state-owned and central enterprises. Among them, 29 real estate companies experienced a loss for the first time last year, including large-scale companies such as Country Garden, Sino-Ocean Group, China Minmetals Land, Central China Real Estate, and Kaisa Group. Although 48 real estate companies still made a profit, their profitability level generally declined, with some companies only earning a few million yuan for the whole year. As the largest real estate developer in China, the recent performance report released by Country Garden shows that its revenue in 2022 was 430.37 billion yuan, a year-on-year decrease of 17.7%, with a gross profit of 32.88 billion yuan, a year-on-year decline of 64.6%. The net loss after tax was 2.962 billion yuan, while the net profit after tax achieved by Country Garden in 2021 was 40.982 billion yuan. This is the first time that the company has experienced an annual loss since its listing in Hong Kong in 2007. Among the 40 real estate companies, none have suffered more severe losses than the financially troubled Sunac China Holding Limited, which recorded a net after-tax loss of up to 29.89 billion yuan. In 2022, Sunac China's contract sales amounted to approximately 169.33 billion yuan, with revenue of approximately 96.75 billion yuan, a year-on-year decrease of 51.2%. Founded in July 2003, Sunac China has been continuously developing and expanding through mergers and acquisitions since its listing in 2010, and has become one of the top 4 real estate companies in China. Its founder, Sun Hongbin, is also known as the merger maniac in the industry, having acquired 3 real estate companies with a market value of over 100 billion yuan. However, the frenzied acquisitions came at the cost of massive borrowing, and not all of the assets acquired were high quality. Many were real estate companies in need of urgent financial assistance, which has become a heavy burden for Sunac China. Huge debts, coupled with China's unfavorable policies on real estate financing, quickly plunged the company into a financial crisis. On May 11, 2022, Sunac China announced that it was unable to pay $29.5 million in bond interest, marking its first debt default and warning of more to come. Sunac China revealed that as of the end of 2022, the group's outstanding loans due amounted to 80.89 billion yuan, while as of the financial report approval date of April 5th, the outstanding loan principal due was approximately 100.52 billion yuan. Many financial institutions are involved in this situation. Deeply embroiled in a financial crisis, Sunac China has inevitably become a disaster for the real estate market, causing all observers to tremble with fear. It can be said that Sunac China's financial crisis has reached a critical point, and various criticisms and lamentations have become consensus in the economic circle. Financial analysts believe that Sunac China's financial situation will affect all related parties, including shareholders, suppliers, and employees. Another real estate developer suffering a loss of over 10 billion yuan is General Properties. General Properties' financial report shows that revenue in 2022 was 25.896 billion yuan, a year-on-year decrease of almost 30%. The company incurred a loss of 14.62 billion yuan during the year, and the loss attributable to the parent company's shareholders was 12.88 billion yuan. According to the financial report of RNF Properties, the company suffered a net loss of 15.78 billion yuan in 2022, and the amount of the loss was 19% of its net assets of 82.86 billion yuan at the end of 2021. The real estate industry has been hit hard by the shocking losses amounting to billions of yuan from developers, causing a major setback to the sector and pushing it towards a potential downfall. As the real estate market is still in a slump, the losses are anticipated to rise in the future. According to data announced by 24 A-share listed real estate companies on January 31st this year, the total estimated losses of these companies amounted to an astonishing 126.26 billion yuan. At that time, 6 real estate companies with losses exceeding 10 billion yuan had a combined loss of a staggering 101 billion yuan. These heavy losses are causing real estate companies to be in despair with little chance of recovery. The situation is getting worse year after year, and while some companies are struggling to save themselves, others are drowning in a sea of losses. They face not only economic setbacks but also personal losses, product quality decline, and broken capital chains. Unfinished buildings remain a persistent problem, while new unfinished buildings continue to emerge, leaving countless families trapped in misery. Since the implementation of the 3 red lines for real estate financing by the Chinese government on January 1, 2021, the real estate industry has been struggling to cope with the debt crisis. The 3 red lines metric put caps on debt-to-cash, debt-to-asset, and debt-to-equity ratios and asked property developers to provide more details about their debts. Many real estate developers are working hard to sell properties and raise funds to deal with default or delayed debt repayment. Among the more than 30 Chinese real estate developers listed in Hong Kong, about half of them have debt problems. The most notable is the Evergrande Group, which owes over 300 billion US dollars. The financially troubled Evergrande not only brought down many upstream and downstream enterprises, but also caused a large number of unfinished buildings. According to an announcement on April 3rd, Evergrande Group has signed 3 restructuring support agreements with offshore creditors. The agreements involve issuing new bonds to replace existing ones, with no interest payments for the first 3 years. This is expected to temporarily address its offshore debt problems and avoid liquidation risks. But total value of the bonds is 19.15 billion US dollars, which accounts for 84% of Evergrande's 22.7 billion offshore debt. The agreements are seen as a positive step, but the long-term implications of Evergrande's debt burden remains uncertain. However, the large-scale overdue debt in China has not been resolved. Data shows that as of December 31st, 2022, the amount of domestic interest-bearing debt overdue was about 208.4 billion yuan. The amount of domestic commercial acceptance bills overdue was about 326.3 billion yuan, and the amount of potential domestic debt overdue was about 157.3 billion yuan. Some domestic creditors have also taken legal action against Evergrande Group. The Evergrande crisis has exacerbated the wave of real estate defaults, and more real estate companies have fallen since then. Senic Holdings Group Company Limited, which was suspended from trading for 18 months after its debt crisis, may become the first real estate company to be delisted from the Hong Kong Stock Exchange on April 13th. As of April 7th, the stock of Senic Holdings, which was listed in 2019, had been suspended for a long period of 564 days. Public information shows that Senic Holdings was founded in 2010 and is a large comprehensive property development enterprise specializing in residential and commercial properties. After 10 years of rapid growth, the company's contracted sales in 2020 reached 113.7 billion yuan, becoming a large-scale billion-dollar real estate enterprise. Senic Holdings is not only the largest real estate company in Jiangxi province, but has also rapidly risen to become one of China's top 30 regional real estate companies. The Chinese government implemented the 3 red lines policy on real estate financing, which limited the financing channels for companies such as Senic Holdings, and restricted the cycle of borrowing and repaying debts. Subsequently, the company fell into a debt crisis after previously being a prominent player in the capital market and real estate industry with a market value of over 100 billion yuan. Now, this black horse real estate company that was once the talk of the capital market and industry is now stumbling and falling. Currently, more than 20 listed real estate companies are still suspended from trading due to debt crises. According to statistics on hand, nearly 10 real estate companies, including Evergrande, Sonac, Shimao, Aoyuan, Modern Land, and Sunshine 100, have all been suspended from trading since March 2022. The list of suspended companies continues to expand this year, with more than 10 listed real estate companies announcing trading suspension in April alone. Economic analysts believe that real estate is intertwined with the government, banks, and property owners, making it not only an economic hazard, but also a social hazard. It may be the largest gray rhino in China and could cause an unprecedented economic and financial crisis if not properly controlled. According to the official media outlet Securities Daily, as of April 5th, 23 A-share listed banks have disclosed their 2022 annual reports. Among them, 17 banks disclosed data on non-performing loans related to commercial real estate that have caught the attention of the capital market and banking industry. The data shows that the total balance of commercial real estate loans for these 17 banks at the end of 2022 was 5.93 trillion yuan, a year-on-year increase of 6%, while the total balance of non-performing loans for commercial real estate during the same period reached 256.4 billion yuan, a year-on-year increase of 72%. Liu Jiawang, Deputy General Manager of Agricultural Bank of China, stated at a financial performance meeting that some large real estate companies with blind expansion plans and high debt levels have exposed risks due to the overall downturn of the real estate industry in the early stage, leading to an increase in risks for the entire real estate industry. Although the Chinese government is currently taking various measures to stimulate the real estate market, recovery is difficult in the face of economic decline and a continuously rising unemployment rate. Data shows that the willingness of Chinese residents to purchase homes has dropped to its lowest level in a decade. According to the People's Bank of China, at the end of 2022, the balance of personal housing loans was 38.8 trillion yuan, an increase of 480 billion yuan from 2021, a year-on-year increase of 1.2%. This is the first time in nearly a decade that the growth rate of personal housing loans has fallen to single digits. And it's also the year with the lowest growth in new mortgage loans in nearly a decade. In 2021, 2020, and 2019, the annual growth rates of personal housing loans were 3.88 trillion yuan, 4.37 trillion yuan, and 4.32 trillion yuan respectively. For a long time, mortgage lending has been regarded as the cornerstone of the quality of bank assets due to their extremely low non-performing loan ratio. However, in 2022, there was a significant increase in the scale of non-performing mortgage loans in the banking industry. In 2022, the major listed banks had a total of 46.98 billion yuan in new non-performing mortgage loans, a significant increase from 2.042 billion yuan in 2021. In the first year of the pandemic in 2020, new non-performing mortgage loans were 19.57 billion yuan. The high amount of housing loans, coupled with the increase in unemployment, has caused many loan defaults from former middle-class families. Data shows that in recent years, due to the inability to repay loans, the number of foreclosed homes in China has been increasing. In 2017, there were only 5,000 foreclosed homes in the country, which increased to 500,000 in 2019, 1.27 million in 2020, and over 1.6 million in 2021. In 2022, it was over 3 million. It is predicted that if this trend continues, the number of foreclosed homes could exceed 5 million in 2023. Even without loan defaults, those young people who have bought houses with all their savings are also struggling under the heavy burden of high mortgages. This 35-year-old single woman used all her savings for the down payment on a bare apartment. In China, most houses are sold as bare apartments with only electricity and water, and the rest need to be renovated by the owner. However, she was unable to afford the cost of renovation and could only move into the apartment without renovations. Because she has to bear a high mortgage repayment every month, her financial situation is very tight. The most she can afford to eat every day is noodles, and occasionally she buys discounted vegetables and fruits that others have left behind. As we all know, the real estate industry has been regarded by the government as a pillar of China's economy for many years. The biggest driving force behind China's 40-year average annual economic growth of 9.5% has been the rampant development of the real estate industry, which has made land sales revenue the main source of local government income. China's Minister of Housing and Urban Rural Development, Ni Hong, summarized real estate as 456. Real estate-related loans account for 40% of bank credit. Real estate-related income accounts for 50% of local comprehensive financial resources, and 60% of household wealth is in housing. It can be said that pulling one hair will move the whole body. US-based economist He Qinglian believes that the land finance formed in various parts of China all depends on the abnormal development of local real estate. Today, China's real estate economy has pulled the government, the banks, and real estate owners into a community of shared interests, making it impossible to slim down. At any time, squeezing the real estate bubble will require the Chinese government and the public to pay a huge price, and the size of this price will depend on the CCP government's ability to control the situation when the bubble bursts. He Qinglian stated that the abnormal development of the real estate industry is not only an economic hazard in China, but also a social hazard. The problem now is that if the CCP government lets go and allows real estate to operate according to market rules, housing prices will plummet, most real estate developers will collapse, local governments will go bankrupt, and many borrowers who speculated on buying houses will default in large numbers, ultimately leaving banks with millions or even tens of millions of unsold houses. A huge economic crisis and financial crisis, unprecedented in history, will erupt.